that they would be wasting their ammunition, but the way that I prescribed it, what I called Ira's policy, was get out ahead of it, announce that you're doing it as an emergency measure, and it's not directed at the equity markets. It's about the dollar, and you're ensuring that there's enough liquidity in the system. And I know a lot of plumbers have called me privately and said, "Oh, there's enough liquidity in the system." I said, no, there's not relative to the amount of dollar positions that have to be covered out there in a debt basis. But we'll have that argument over and over and over again. But they could have gotten out ahead of it. Now, whatever they do, they're going to look like they're only responding to stock markets. Well, here you had an opportunity to head off a potential economic crisis by ensuring that there was enough liquidity. And if you didn't want to cut rates, then announce, of course, that you were opening up those swap lines for the emerging market countries that aren't necessarily presently have access to those swap lines. So you could have gotten out ahead of us. Now it's only going to look like a knee-jerk reaction to save the equity markets. The Fed just can't get themselves out of that game, unfortunately. And that's what they should have done, because this was potentially and is still potentially an economic event, not a stock market, not a financial. The financial will follow the economic. And you know what? Pathetic. And more pathetic was that the G20 communique, well, there was no communique because they couldn't agree about anything really. And so world policy leaders, you know what? Tell them to go all sip mint juleps at Davos, enjoy the slopes, and massage, stroke each other's crotch and be done with it. Because you know what? They're a pathetic lot to begin with. That's all. That's all I got to say, because they've never shown it like they show now. If crisis develops, they got nothing. But if a group of Nobel laureates were stuck in an option position, they'd be running around in circles and trying to figure out how to solve the world's problems, a problem that didn't even exist. Pathetic. That's all. That's my prairie populist speaking. Sorry.
You're right.
Makes sense to me. I mean, Ira, about half hour ago, Peter Bookvar said it wouldn't surprise him if the Fed waits until the spring. We were just talking about this. Wait until the spring, so that they could see, what the fallout might be. Well, thank you very much. Operating on a lag again.
Yeah, and I know that I didn't listen to the interview, but I talked to Peter enough and know Peter that I'm sure that frustrates him. And but him and I see it differently, because he's looking more for supply shock, where I'm looking more for demand shock. But the end result will both be, as Heisenberg on his Seeking Alpha today talked about through what's his name? Because Heisenberg he's basically an anthology of a daily anthology, and he's smart enough. I'm not diminishing him. He's smart enough to understand what a lot of these guys say, and he tries to explain it to the greatest amount of people. You're going to be looking at a stagflation scenario, and if that's the case, again, one of my readers out of Canada, he says, "Well, you're at odds with David Rosenberg." I'm not at odds with David Rosenberg. David Rosenberg talks about the bond market in terms of an investment. You can trade and should trade the bonds from the long side, because that's the way the momentum is. But for an investment, I would never make the buy. I would shorten my duration. That's my investment hat talking. Shorten your duration as much as possible. And I still say that if the Fed had a half a brain, they'd be cutting now to steepen these curves out. You do not want these curves flattening here. Bad signal at the bad time. It's telling you, get out ahead of this. And they may wait, because Mnuchin out of the G20 said, well, we could probably wait 3 or 4 weeks. You know what? Here's the guy who couldn't call enough banks over Christmas weekend in Christmas Eve on 2018, making sure they had enough liquidity in the system when they got nervous, prior to the Powell pivot. Yeah, come on, put your heads together and do a constructive policy for a change, rather than just chasing each other around in circles in an effort to support an equity market that is in la-la land anyway.
Ira, could you imagine if Mnuchin decides, oh, there's plenty of liquidity right now, we'll issue another couple $100 billion as short-term paper?
Oh, sure, go ahead, why not? You know what? Yeah, I don't know what. Yeah, they'll fund vaccines for everybody. Yeah, stop it. You know, it's really a pathetic lot. And you're hearing my frustration, and I'm frustrated because, again, the G20, they're meeting. These are the world financial leaders, and they can't come up with a clue. When the smartest person sitting at the table is the IMF director, and I have a lot of respect for her. She's really risen to the top of class. She gets what's going on. You're in a very serious situation. That's all I'm going to say. I'll stop there.
Yeah. But I mean, not for nothing, but we're only down 5% off of the intraday high in the S&Ps.
Oh, shit. It's just another, you know what? And honestly, I don't care about the S&Ps. I mean, I care about it from a money-making proposition, but they're not telling me anything. All you're doing, again, is taking away the last lift, which, for the life of me, profits weren't there. Okay, so now you're anticipating second and third quarter profits. They're just not there. And was it you know, was the last leg of that because of, well, you know, the stronger Bernie got, the better Trump looked? You know what? I don't know. But the last part was absolutely frothy by any measure and was carried on the backs of 5 stocks. Not a way to run a capital market. And don't forget, at the end of the day, the stock market is capital formation. Sorry, but that's just the way it is. Any other questions?
Oh man.
I know. You're really. I'm sorry too, because you're hearing my bite because these policymakers just, you know what? When you need for them to be able to step up, they need to step up, and you know what? They don't show it. Now you can say, oh, they're doing the sensible thing. They're not panicking. It's not panic to get out ahead of. Now they'll if they were to cut tomorrow, again, it would be perceived as a panic and an effort to save the equity markets. You want to boost up Bernie Sanders, and I'm not making a qualitative judgment about Sanders. At least he's got some integrity. But if you want to boost him up, go ahead, keep bailing out the equity markets and only respond to equity markets and not to the economy at large. That plays exactly into his hands.
Jeez. This is the most interesting movie I've seen play out in quite a long time.
Me too. Honestly, me too. This is far more, and this is Italy that set this on fire, because on Saturday, all the news I read was that things were slowing in China, and you know, and then of course Sunday they jumped up again. The death jumped up, but Italy's reaction to the amount of cases they had, I think, really said, "Uh-oh, this is now spreading far faster." And I'm not sure that that's the case. And again, the question that real scientists are asking, not Jim Cramer and company, is how lethal is this? They don't know yet. They just don't know. And nobody knows. Yeah, we can speak in percentages, but they don't know, and they don't have enough, and they have not seen enough to really make a qualitative judgment about how lethal this is. So it's one of those questions that are hanging out there.
Robert, are you still here?
Yes, sir.
All right. So we had, Ira, we've had some pretty good anecdotal conversations today, you know, with Robert being up in Venice, in Italy for work, for his other job. And also Michael, Michael, are you here still? Michael, speaking with his anecdotal, with his family still being on the mainland,
right?
And, right, and all of that.
Well, Wait a minute. What's Robert doing in Venice? They sell tractors.
Robert
in Venice?
Sico, the Due Santi wine
I know.
guy.
I know who it is. They don't have tractors in Venice. There's no goddamn farmland. Right now, sorry about that.
Well, that's a long conversation, but there was a fellow called Laverda who was making a combines that you can harvest on the very steep slopes of the hills around
Really?
Italy. And we bought them. We bought them about 10 years ago. So it's part of ECCO. So we have a plant 55 kilometers away from Venice. So I fly into the airport.
What is that? La Verde? Is that the name of the company?
Laverda. It's a straw walker combines.
Is that what it means, green in Italian, La Verda, or is it true?
Laverda made great motorcycles too.
It's Verde, but it's just the last name of the fellow who designed it.
Oh, okay. So yeah. So when are you traveling back to the U.S.?
In 7 hours, Ira. I flew in on Sunday morning just to found this blew up right in my face. So I'm taking my team of 5 Americans back to U.S. and we all happy that we've got booked on the planes and leaving. The local team cannot meet now. There's no meetings, no canteen service other than just the little lunch boxes, no gathering. I told the guys, you probably read it. Everything has stopped in Italy. People are baffled and surprised when I talk to them. They say, look, where is the virus? It's in Milan. We had 1 or 2 cases in Rome, 1 or 2 in Venice, and they feel frustrated that this is going to bring them down to their knees economically.
Yeah, that's a very good point. I said that to somebody, that this is probably going to play well for Salvini and the league, because you know what? The Italian government's going to have a problem here with the way they respond to it one way or another. And the fact that he's back on the rise anyway, and people are just frustrated. So interesting. And again, they don't really have control of their situation. What are they going to do? Where are they going to come up with the money? I know, emergency measures. I think the solution, though, Robert, your solution is for Pax to send you the big G5 and bring you home and be done with it already.
I have to liquidate my shorts from Thursday first. Hold on, Robert. I'm still. Okay. Here we come.
We can still have a laugh.
Oh gosh, this is the price action, and really the markets. This is when the price action makes me look so smart, and it's got nothing to do with me being smart. It's just got everything to do with sticking to my guidelines and following what the market tells me to do. What do you think of the dollar? I listened to. I wasn't here Friday. I was at a funeral, but I did listen to much of the conversation, not the whole thing. But what do you think of the dollar coming into after this weekend?
Well, this is one of those areas. That's why, first of all, they need to do a couple things. They need to steepen the curve and cutting the rates to try to effectuate and drive the dollar down. If you're not going to do it that way, just open up a massive amount of swap lines and make dollars available to everybody around the world, especially the emerging markets. The dollar, you don't need the dollar going up here. Not only do you not need it, it's not beneficial. I'm looking across the board, and it's interesting that even the peso, which was getting hammered, is well off its lows. The ruble, the emerging market currencies got hit pretty good last night, and they actually gave you a little time to sell them out of the chute. I was amazed that gold only opened $6-7 higher last night.
Yeah,
I was flabbergasted upon seeing the news. So I think again, the dollar gets a bid because everybody's pouring into U.S. Treasuries, as you can see. I think it's a knee-jerk reaction. I can buy 2-year Canada with a higher yield than 2-year U.S. Now you can say, well, Canada's really going to suffer on a global slowdown. They are, but I'm going to tell you what: the United States is not immune here, everybody, and the equity markets are showing that this is going to be, if this has sustaining power. It's going to be a global phenomenon. And the issue is going to be, as always, who's got the most debt? Because I'm going to run away, just like I would run away from a corporation who carries too much debt. I eventually will run from a government that carries too much debt. And this is now going to be an argument that's going to be out there very vocally. In fact, I'm doing a Financial Repression Authority piece, a podcast. I'm doing two of them on Thursday, one with Lacey Huntington, and the other, a four-bagger with David Rosenberg, Jimmy Bianco, Bookvar, and Harris. So that should be interesting. Yeah, that's a separate one. That'll be interesting.
Oh, I'd pay money for that one. So if we're looking, that's interesting.
Because I'm going to put a hat out in front of my feet before anybody sees and see how much you drop in the hat. I'm looking forward.
That's interesting and scary to me. So now, if that brings into, I keep going back to this. It was one of our first public conversations that we had when you had said that eventually the laws of economics will not be ignored. And then we've you said, Benzine quote, markets remain irrational longer than we can remain solvent. So now if it comes back to, just the fundamentals of debt, what country has the biggest debt? Well, now we're talking about a huge downside, and I don't even want to know what that looks like, and the Fed can't do anything to stop it. They can't, how much room do they have to go?
Okay, that's right. We don't know. We don't know. You know what? They've borrowed a lot from the future already. And now you have an actual crisis, and they're kind of sitting here. And really, at the end of the day, and I've had this discussion with a few people who I really respect over the last 24 hours, when they talk about what they talk about, let's go back to Lael Brainerd, which I had in the blog. So Brainerd's piece, because she has a different definition of symmetrical 2% inflation than maybe Powell does, because her symmetrical is, well, from the way that I understand it, and she laid it out the way she saw it, was that if we've been under 2% for 6 years, so if we stayed above 2% inflation for 3 years, we would basically be smoothing it out. I know this is a very rough analysis, and I'm not doing her justice, but that's in a sense that it's right. And in that regard, her view is nothing more than MMT, or modern monetary theory. Because at the end of the day, you may as well just print until there's no tomorrow to eradicate the debt. And if that's the case, if that's what you're going to tell me your policy stance is, the hell, I'm going to rush and shorten my duration even quicker, because I don't want to hold anything long term. If that's your answer, is that we have a printing press, I do not want that debt. So you are now at loggerheads. Really, here's three things that are going on that people said couldn't happen. The dollar would rally, the gold would rally, and the bonds would rally. Right? This flies in the face of every pundit I've ever seen who they bring out on, in the mainstream media. Well, the dollar, it can't happen. Well, evidently they can. And again, as we know in this room, and we've talked about it for quite a while, it's the gold currencies, because again, it's a fiat currency world, and that's what you're dealing with. And the policy statement becomes, how do you deal with debt in the fiat currency world? That's all, because the fiat currency world is nothing more than you placing a great deal of credibility on the central bank. Now, if the central bank under Paul Volcker has earned that credibility, fine. But I'm very hard pressed to find one central bank that I can tell you has earned my respect and the credibility that I should park my assets there. And I'll say this, and I know that the Canadians are actually in the best spot because they've never done QE. The Australians have never done QE. The Kiwi have never done QE. They have other problems, but QE is not a problem. And they have a lot of room actually to stimulate where others don't. So that's my take on that. Because in a fiat currency world, you need my respect. You don't have my respect. Yeah, okay, goodbye. And that's, that's what the metals tell you. People are flummoxed by it. But again, and that's listen, I'm gonna can you still hear me, Matt?
Yeah, oh yeah.
Okay. Now people are, I'm looking at this gold, silver closely, and I'm telling you right now, I'm out. I'm out of my metals for the moment. Up here, I just want to see the way certain things play out. But with what the IMF has done in Argentina, and the fact that they may take a hit, and I know I always get ahead of myself, and this is one of those moments. And Matt, you're doing it right. You're letting the market tell you what you need to do, and that's the great thing. But watch for some announcement about some IMF gold sales in order to shore up their balance sheet if they take a hit in Argentina.
All right, what? Oh my God! Holy shit! All right, IMF gold sales.
They've done this. I'm not saying it's coming, but it's something for me to watch out because the IMF is going to take a monetary hit in Argentina because they lent them so much money over the last few years. And if everybody else is going to get a haircut, all the private debtors, and there's been some private equity funds who have taken some massive amount of hits in Argentina bonds.
But that's not an if, really, is it?
No, it's a when. Thank you. Who is that, Angelo? Peter, sorry. I always get you two mixed up, and I shouldn't. But it's not an if. They'll do it, but I don't care because every time that happens, it's been a great buying opportunity. So I'm kind of wishing for it to happen, to tell you the truth. The last time they did is when they sold the 200 tons to India, and the gold dropped from about almost 1090 down to 1042. It's 1042. And where everybody was going, oh my God, the IMF selling gold. Yeah, great. See, all you're doing is feeding the ducks at the time. That was November of, I believe, 2009. Not in front of the screen. So, but I think that's what it was. You can go back and do the work the first week of November 2009. And that's it. But I think we've laid the groundwork pretty well. I'm actually stepping away from the machine because it's been just too much. And I have some things that I want to watch play out. The Canada for me against the S&Ps have been one of the better plays. Now, I'm looking just to play with that, but the Canada is struggling because, again, commodity prices, as we see, really getting whacked, not just equity prices. The commodity prices are right in lockstep with them, from copper to oil.
Well, look at the demand hit on oil as in China. It's huge.
Yeah.
And as people are canceling these plans and travel plans and shutting borders, I mean, it's going to accelerate actually.
Which is why the policymakers ought to have gotten ahead of it, because that's everything we're talking about. We really saw it 2 weeks ago. When we saw it when the dollar rallied like mad and the commodity prices dropped dramatically. All the signals were there that, hey, this is something bigger than you originally think. Okay. But they've been a little slow. So now, again, the danger is that it always appears that they're only responding to equity markets. It's really a bad position for a central bank to be in. Very bad.
Ira, I was talking to a buddy of mine this morning who's got a factory 250 miles outside of Wuhan, and another factory in Vietnam. And this morning, last week they were still closed. Today he couldn't really give me a straight answer. He didn't really know. Yeah. And I said, well, what about Vietnam? And he said, well, they're still trying to get replacement workers because a lot of the workers in Vietnam, at least for their factory, are Chinese migrants that went back for the new year that the Vietnamese won't let back into the country.
Big problem. That's really what a big part of the problem is. You know,
Okay.
and it couldn't have happened at a worse time.
And here we are 3 weeks later.
Yeah. That's
All right,
right.
I got a hard question for you. Okay. So the market's down a lot today. This is the sharpest down day probably I've seen in a long time. And
Yeah.
is it like a liquidity event or the leading edge of a news flow that the market has, just didn't want to price in? But this is the beginning of a news flow. It isn't. The news isn't in. It's happening. It's beginning to happen.
Yes, I think that's absolute. I think that's what it's not a liquidity event. There's no shortage of liquidity in the system as of yet. Will there be? Well, we don't know. It all depends how big the losses are across the board. And I'm not just talking about equity markets. There's going to be other losses. So you know what? Watch the repo market. There's no stress in the repo market as of yet. But if somebody took a big hit and needed to do some funding, it'll probably show up there.
Ira, we were talking about the VIX this morning, and nobody knows where the various thresholds are for all of the short vol monkeys. Now the VIX was up 50% today. Now it's up 46. At 25.
That is such a good point. Yeah, that's a great point.
So short vol, repo, that's an elixir for something to blow up.
It is, and there's so many people who are involved in that trade. It's amazing. They go quiet, but that's why But they start selling the equity futures, believe it or not. And we've seen that they do start selling equity futures in a way to ease their pain, which puts more and more pressure on it. Yeah, we'll see that because again, it's the effect of the electronic world. Everything is interconnected. All right, I'm going to have to cut off now, but this is good, and I'm glad this room has worked hard to get here. So, and it's the hard work that pays off, as I always stress. So, good on you, as they would say in Australia, and keep banging it.
Thanks, Ira. Thanks again for stopping in.
All right. Thanks, Ira.
Have a great day, as always.
All right, thanks. Okay.